Hey, what's going on? JP Albano here. In this video, I want to talk about this idea that, is it really the right time? Is it too risky to buy commercial real estate in 2003? And this is a conversation I had with a recent tech sales investor of mine. And we were just talking about some stuff, and he made a comment saying something along the lines that, well, real estate is risky. And I asked, I dug deeper, and I said, well, what do you mean by that? He's like, well, everything's so expensive right now, and interest rates are really high. And it got me thinking, geez, this is sort of an interesting conversation to have with people and kind of break it apart, right? And talk about what does that really mean? And is really now a bad time to invest in commercial real estate? So let's break this down into like two components. We have high rates of interest, and we have high rates of inflation. So let's start on the interest rates. So right now, the interesting part about the way commercial real estate works, there's this inverse relationship that happens. I mean, the opposites, right? So when interest rates are high, unlike how they've been in the last 5-10 years or so, when they're high, as a seller of a commercial property, of an apartment complex, I need to lower my price in order to sell it. Why is that? Because all the buyers out there, the only way commercial real estate works, or apartments, I'm going to say commercial real estate, I'm talking about apartments. The only way it works is by leverage. I need to get a loan on the property. So if I'm buying $1 million property, I need to get a 75% loan or $750,000 on that property, and then come in with about $250K of equity, of cash. These are round numbers. There's actually more money than that, but just keeping it simple here. Because when I go to sell my property for $1.5 million or $1.4 million in the future, I need to be able to return my investor capital back, that $250K, need to double it, right? So I need to sell it for 1.5. These are just round, again, simple numbers. I can't buy a property for $1 million with $1 million of cash and then sell it for $1.5 million. It doesn't really work out that way. You can, but you're better off leveraging it and having leverage on there. And so when interest rates are high, right, I can't sell my property for the same price I wanted to before. So if my price was up here, when interest rates were low, now that they're high, I have to do it lower. And the reason that is because when banks size a loan for an apartment complex, they size it based on the property's ability to pay the mortgage. They look at a couple of different things. There's a debt service coverage ratio, DSCR, or break even. Essentially, they're looking for how much money, if this property makes $1 million a month in net profits, and my mortgage payment is $1 million, then that cancels each other out. There's no wiggle room there. But if the property makes $1 million a month in revenue or net profit, and my mortgage is $400,000, well, that's a huge cushion, and that's fine. So they'll push the loan proceeds, that mortgage, up to a point where you're getting pretty close. Usually it's, call it 75% to 80% of the number there. So that'll be like $700,000 to $800,000 or $750K of mortgage payment for that $1 million of net profit. And that gives them enough breathing room to be able to weather kind of problems that might happen at the complex, occupancy problems, collections problems, things like that. And so if the rates for the mortgage get too expensive, so the interest rates are at 6, 7, 8, 9, 10, 11%, well, the loan that I was going to get for $750K, I now have to take a lower loan payment, loan amount, maybe $500,000, because the interest payments are so high that I'm back at that $750K number. Does that make sense? And so in order for me to sell it to someone who can qualify for a loan, the only variable there is changing that purchase price. So I can't sell it for $1 million anymore. I got to sell it for $800,000 or $750,000 or $700,000. That's what we're seeing. We're seeing discounts between 25 and 30% or more on properties that we're selling, just a year ago or even 6 months ago. So the market has already shifted from being a seller's market to a buyer's market, all because of interest rates. And so if anything, I feel like right now is a super wonderful time to buy commercial real estate, to buy apartment complexes because of the discounts that are out there. Now, interest rates, they're not going to be a permanent thing. They'll settle down to some point. I think historically speaking, if we can be somewhere in the 5s and 6s, even though that's high for where we were over the last few years, it's pretty generous for where it has been historically over a longer period of time. So I think those will eventually stabilize and kind of pan out. But yeah, when interest rates are high, it helps people like me that want to buy apartment complexes because it gives me a valid excuse to buy them for a lower price. That's kind of point number one. Point number two is, as an apartment operator, we serve people that want to live in apartments. But guess what happens when interest rates are high? Qualifying for a mortgage becomes harder for a house, for renters, for home buyers. That's part number one. So they get pushed out of the market. But number two, that potential renter pool increases. And I mentioned earlier, we buy apartment complexes in growth markets. So part of buying in these growth markets are places where there's already a housing shortage. There isn't enough rental properties for people to want to live. And so when you add that fuel to the fire, you've got even more people that are looking for places to live because they're pushed out of the home buyers market, and they need to rent. Never mind the fact that the trends and demographics are all pointing more and more towards people that want to live in rental communities. That's baby boomers demographics, millennials. People just don't want to be bothered with owning a home anymore. The American dream of owning a home is sort of dead, and it's also very expensive right now. So those are additional conduits that are helping us in our favor of looking to buy apartment complexes even during times of high interest rates. Let's talk about inflation. One of the reasons that make apartment investing such a great hedge against inflation, meaning it works to stop its effects, is the fact that every single month, and the more units you have, the more this happens every month, but every month a lease renews, right? If you have a 12-unit property like we do as one of our early properties, assuming we got someone in there every single month, so January, February, March, every single month a lease is renewing. And when the renewal time comes, that's our opportunity to say, look, hey, if you like living here, that's great. The problem is our expenses have gone up, right? The cost of landscaping, the cost of the trash, the cost of the property taxes, all of these things have gone up. And so in order for this to work for us as the operator, your rent has to go from $1,200 a month to $1,375. And you can either take it or leave it, right? Because depending on, we do a market study to see where the other competition in the marketplace is for their rents. And so if we see if everyone else is pushing their rents up as well, then we'll be in a position to move our rents up to match our new expenses. And this is why, rent today isn't what it was 10 years ago or 20 years ago or 40 years ago, right? Being able to rent a one-bedroom apartment for a few $100 a month was a sort of a thing of dreams of yesteryear. You can't do that anymore, right? So that's because of inflation. And when times like this, where you have these rapid levels of inflation, you're able to make those adjustments, on a very granular basis. Unlike maybe an industrial contract or a commercial retail place where you've got unless the contract has written in it that you can do these kind of cost of living, cost of services increases, you're kind of locked in at that price, at that rent number for a period of years. But in apartments, you can change that every time the apartment's up for renewals. And so that gives apartment investing this unique, multifaceted ability where they weather economic storms really well. During times of inflation, you're able to do these renewal increases as they happen. During times of recession, especially the types of apartments that we buy, which are workforce housing, these are older apartment complexes. People that are making good money, they're living in the luxury apartment complexes. When times get tough and they get laid off, they downsize. Where do they go? They go down from the brand new apartment complexes maybe to an older one that was built in the 70s or 80s or 90s, right? They're not crap. They're just older apartment complexes, but the rent's cheaper, right? They can afford that. And so by being able to serve clients that operate in that space, that it's a huge, huge potential renter pool for us. So it puts us in a great spot for when times get tough. People, downgraded that. And then when times are good, people move up, right? People that are in the older C-class properties, maybe they get a new job and they're like, you know what, I can afford a nicer place. I was paying $1,200 a month before. Now I can afford $1,500. So they move on up to, one of our properties, right? They're not quite at the $3,000 a month place, but that's cool too. So that's one part. The other piece too is this idea that as a consequence of those recessionary times, what happens historically is, all the asset classes are hit. The stock markets, the equities, the commercial space, the retail space, all that, they're sort of hit hard. Office space, hospitality, they're all hit hard. But what has happened historically is that apartments do a couple things. One, they bounce back faster. They recover faster than all the other asset classes. and they're impacted the least compared to everybody else. So this, among many reasons, are part of the reason why I fell in love with apartment investing, because it has so many good things going with it. Because it has so many good things going for it. And so wrapping this up here, when asked, is buying an apartment, is real estate risky in today's day and age? I think the answer for myself is absolutely not. And if anything, this is a wonderful buying opportunity. I feel like there's blood in the streets where people are being cautious about getting in. That's your opportunity to buy. And we're already seeing it in the marketplace. So if you like this content, go ahead and give me a subscribe.